Hi, welcome back. Please like, share, and subscribe and consider donating so we can keep this content going. This module is a continuation of the philosophy behind technical analysis. Last time we discussed that technical analysis is the study of market action, or the price of goods and the volume in which it's traded. Today we'll discuss the philosophy of a technician and the belief behind price trends and history of markets. So an important thing to consider, we all learned in high school, and it applies to price trends, is Newton's first law, or an object at rest stays at rest, and an object in motion stays in motion with the same speed and in the same direction unless acted upon by an unbalanced force. So what this means is the trend typically continues until new forces act upon it, whether it's a change in volume, the open interest on futures contracts, or rapid changes in the ask or bid price amongst buyers. So one of the things you can see when analyzing a index or a commodity or such is you can sometimes see what individuals are willing to pay for it beyond the market price. That can be one of the unbalanced forces. So one of the primary beliefs and tenets of technical analysis is that price trends can be identified and acted on at an early stage. Thus, a new bull market in a commodity or an index can be identified and purchased, or a bear market can be identified as well, and you can make decisions based on these trends. Almost all technician tools that we'll discuss in the future are utilized for this end, for identifying trends. And that's pretty much what it's all about, as a trend is really what is needed to trade a market effectively. As a technician of the markets, it's important to be able to, one, recognize a trend, and two, recognize when the trend is changing. With this info, a technician can strategically and effectively trade any market. This tenet really is the foundation of any trade, whether you sell physical goods in a physical marketplace or digital goods through brokerages and exchanges. Recognizing trends and recognizing the changes in the trends is the key. Anyone who recognizes a trend too late and acts late is just as bad, if not worse, than the one who didn't even look and didn't trade at all, because you may find yourself at the end of a bull market or selling at the beginning of, or buying at the beginning of a bear market. Apologize. So notice the indicators below the price chart and the divergence from what is happening in the market. So there's hundreds, if not thousands, of indicators that are already made that you can utilize in your charting efforts. And you can even design your own and make your own to help you in your trades. So the next concept is that history is very important. So when considering trends, we alluded to this in the first module with the Mark Twain quote about history not repeating but rhyming. So history does not repeat, but it appears to repeat. And those that study history in general, especially the history of a commodity that they're trading, will have a much better time charting and recognizing changes in those trends. The chart represents the psychology of the market. Mass psychology doesn't change much. An individual is unpredictable, but a crowd isn't. The chart represents the crowd's mood towards the subject, and the market action is what moves it. As we can see with SLV in the chart, the mass psychology of silver during economic crises can be seen from 2008 to 2011 very clearly. Of course, history just rhymes, and it doesn't necessarily repeat, but understanding the past will help the technician forecast the future. So Thank you for watching. In the next video, we'll discuss a few more differences between fundamental and technical analysis, as well as a few other concepts. I hope you enjoyed the video. I'm trying to keep them short and quick, so we'll have key concepts and key tools in short videos that you can watch and learn from and rewatch in the future if you need to. So let me know below what you thought about the video, anything you'd like to see in the future, any questions, comments, or concerns. And thank you for watching and have a great day.